The Consumer Bankers Association is pleased to welcome you to today's webinar, The Empowering Consumers Everywhere, Future-Proof Your Open Finance Strategy, presented by Akoya. My name is Isabella, and I am pleased to welcome you to today's event. Thank you for joining. Please note we are recording and all participant lines are muted. If you have any trouble, please email conferences@consumerbankers.com or send a message in the Q&A box. This presentation will last up to 60 minutes and will include question and answer opportunities at the end. You may submit a question at any time by entering the questions into the Q&A box on the bottom of your screen. As a reminder, the views expressed in this webinar are those of the presenters and do not represent the views of CBA or its members. It is now my pleasure to introduce our speakers, Paul LaRusso, CEO of Akoya, Olga Hoff, EVP, Director of Enterprise Retail Banking at Zions, and Thea Mason, Vice President, Consumer Banking at PenFed. And facilitating today's discussion is Courtney Robinson, Head of Policy and Communications for Akoya. Paul, Olga, and Thea, welcome. And now I will turn it over to you, Courtney.
Thanks, Isabella, and thank you all for joining us in today's discussion. Like Isabella said, my name is Courtney Robinson, and I'm the Head of Policy and Communications here at Akoya. I'll be facilitating today's conversation. We're here to talk about something that impacts all of us: how consumers access and share their financial data. For years, only a select few institutions had offered their customers transparency and control, but that's no longer good enough. Consumers expect, and they deserve, visibility into what data they're sharing and with whom across the entire financial ecosystem. Today, we'll explore how financial institutions can meet those expectations, reduce screen scraping, and create real business value through modern, secure, API-based data access. All right, panelists, are you ready? We can jump right in. Okay, let's start with the why. Consumers have increasingly embraced fintechs to manage their finances. Olga, from your perspective at Zions, how have consumer expectations around digital experiences changed in the last few years? And what kind of feedback are you hearing from your customers when it comes to data access and control?
That's an excellent question, Courtney, and thank you for having me, and certainly happy to provide a perspective. I mean, as I think about kind of what's really shaping consumer expectations, I mean, a lot of the factors are actually coming outside the financial services industry. So they're coming out of experiences consumers are having with retailers, with airlines. So those expectations are evolving in an ecosystem that's separate and distinct from financial services, but the expectations are absolutely spilling over into how banking and financial services needs to interact with customers. Well, obviously, there are generational shifts are playing a role. Consumer comfort with sharing all sorts of data with the world is evolving, right? And apparently banking credentials are no exception. And so sort of this culture of digital oversharing that really sort of started in social media, it is absolutely evident right now in how consumers deal with their financial lives. So in fact, I would say that younger consumers are probably spending more time curating their social media profiles than applying similarly sort of diligent hygiene practices to how they're managing their financial lives and kind of their credentials. I think expectations around channel availability obviously are evolving. I mean, what used to be acceptable in terms of downtime, outages, just even a few years ago, and really, especially was channels such as open banking. Is no longer acceptable. Anybody who has done a conversion, anybody who works in a financial institution who has done a conversion where a third party or an aggregator just was a little bit behind the power curve in terms of updating their scripts knows that Uh, when things break, consumers call the bank because clearly it's the bank's fault that their third-party application has broken down. So the expectations around kind of resiliency, reliability, and just this smooth, uninterrupted experience just continue to get elevated. I will say, I'll contrast to all of these changing expectations what hasn't changed. What hasn't changed is the trust that consumers place in their banks. So there's this expectation that my bank has my back. We continue to reinforce these expectations through policies such as zero liability that exist in the card system. I think the nuances of that are appreciated by industry players. They're not really appreciated by the broad consumers. So there is absolutely an expectation that if there's an unauthorized debit card transaction, the bank will just take care of it, and unfortunately that spills over into any transaction and any kind of an experience. So this trust that we developed with consumers, and it's the foundation of our relationships, that has not changed, and we need to continue to invest and support that. So that's maybe how I'd kick that off.
No, Olga, I think that's such a great call out, the way that consumer expectations rest with their financial institution, with their bank or their credit union, no matter how they're handling their financial lives. So I think that's a perfect segue to Thea. Thea, as more members engage with fintechs, how are you thinking about protecting their data, especially in terms of preventing breaches and ensuring secure access and control? And what does that signal about their expectations around safety, transparency, and trust?
That's a great question, Courtney, and thanks for having me participate in this. So I think in some ways, what Olga's experiencing at Science is very similar to what PenFed is experiencing. We're a credit union, so our mission has always been centered around empowering our members through trust, transparency, and service. But what we're seeing today is that our members, they want full control over their data to enable their digital life. They're using budgeting apps, they're using investment platforms, digital wallets, and they really expect seamless access and transparency from their primary financial institution. At the same time, they view us as stewards of their financial data, and they look to us to keep their data secure and safe. And that's happening in an environment where consumers have an increased frequency of fraudsters attempting to gain access to their data and to their accounts. So it's really important for us at PenFed to make sure we have a platform and a capability that's keeping our member data secure, but still enabling their financial lives. As a result of that, 2 years ago, we really started on this journey, and we've partnered already with Akoya to invest in secure API-based data access, and we have discontinued screen scraping. We just found that the screen scraping was exposing our members to a risk that we did not perceive them to want to take on. So at this point, we're fully running on the Akoya platform, and we are seeing the reporting, and we see increased usage by our members of data sharing and this capability every day.
Awesome. Paul, moving on to you and looking at the industry more broadly, how's the rise in fintech adoption and by default, screen scraping, like Thea mentioned, accelerated the need for data transparency? And why do you believe it's so critical that all institutions, not just a few, begin offering modern data sharing experiences to consumers?
Yeah, thanks, Courtney. When you think about, for your first question around the adoption and how much of this has been driven by consumer demand, just back in 2018, there was roughly a little under 6,000 fintech apps. And fast forward to where we are now, it's over 12,000 fintech apps in the US. So more than doubled. just over the past 7 or so years. So you see the breadth and the expansion of the apps that consumers want and consumers want to use to help manage finances. But then it's also the expansion of the use cases. Now we're seeing use cases where consumers want to pay with their bank account, do more payments on account-to-account transfers. You're seeing the rise of funding accounts for digital currency and cryptocurrency, stablecoin, funding wallets. I mean, all of this is growing. And then you're also seeing alternative means of underwriting and help complementing what traditional bureau data lacked around deposit-based, cash flow and data there. So you're seeing the size and scale of the fintech applications significantly grow. And then you're seeing this expansion of the use cases where customers want to use more. And that's great. It's a good thing for consumers for them to have more choice and more options to have more control over their financial life. With that brings a lot of risk. And you think about these very large pools of data that are now being proliferated out into the ecosystem. And that creates a lot of risk, not just for the consumer, but also for the participants and for the financial institutions who, I think Olga made a great point earlier. When something goes wrong, the consumer will typically call or contact the financial institution to help figure things out. So I think that kind of puts us in a space, okay, how are institutions doing? And I think, Thina brought up these, great themes. I think about the first theme around giving the consumer more visibility and control around what's happening. And that's what a more secure channel, more secure open banking provides for the consumer. Being able to see which applications are taking what data, how frequently and when, and putting the consumer in control around how that happens and how that occurs. The second thing, which Thea kind of touched on, is the security aspect. Moving to APIs and secure APIs, closing down the back door on screen scraping. You really start to protect not only the customer or the consumer, but also the financial institution systems and infrastructure. And you start to mitigate a significant amount of risk that's been out there, for the FI. And then the last piece is around data privacy. And when you move to a token-based model where you're only allowing the data that is actually needed for the consumer use case, you're starting to enforce practices around data minimization and only providing the data of what the consumer actually needs to fulfill that particular use case or that particular task. So I think, thinking about the large amounts of expansion of apps, that's great. The use cases, that's also great for consumers, but now you have the risks of these large amounts of data sitting out there. And for financial institutions, thinking about the control for the consumer, the security, and then the data privacy.
Yeah, thank you, Paul. So now that we've talked to all of our participants and covered the why, let's shift to the business case. So many still see open finance as a compliance or infrastructure issue, but actually, financial institutions should be looking at it as a strategic growth opportunity. So, Paul, how do you think institutions can start to reframe open finance from something that they have to do to something that can unlock actual long-term value? And what are some of the tangible ways banks can begin realizing that value today?
Yeah, it's a great question. I've worked with a lot of financial institutions in different evolutions of this as they're thinking about it. But I think one thing that I see a theme that is where financial institutions are very successful in this is when they start with what the problem is that they want to solve. What is that strategy, or what's the kind of focus area for them? Once that is established and aligned on internally within the organization, it makes the ability to execute, to partner, to implement, to manage, to track, to measure a lot easier. And typically what I'll see is, putting aside the regulatories, I've seen more financial institutions now focusing on the value and what it delivers. And there is a big amount of focus on the consumer and how they're providing more value and benefit to the consumer. And it comes in a couple different ways. One is the control, ensuring that the consumer is put in control of their finances and their data. And the second is the visibility, and the engagement with the financial institution. So as financial institutions start to build permission dashboards and visibility tools and starting to show their consumers who they're interacting with, what type of data sets, and how, they're now building an engagement kind of portal or a dashboard, but they're increasing the engagement and touch points that they'll have directly with their consumer. And I think Thea said it earlier, but this concept around trust, like you start to build more trust with your consumers by being that trusted hub of not only where you might have your credit or your debit card or your bank account making payments, but also where all your financial data is flowing. So the consumer starts to engage more with the financial institution and builds more trust in that relationship, where we're to the point where you really feel like your financial institution is really there looking out for you and making sure that not only your money but also your data is protected and you have control over who gets what and when. So I think that's one of the big values that we see FIs moving towards.
Great, got it. So Thea, Paul touched on this a bit, but what role does consumer trust play when it comes to open finance at PenFed? And how do you think creating more transparent data sharing experiences can help deepen the member relationships and loyalty that you all have?
Well, Courtney, as part of our implementation, and also we've stood up in our digital banking experience a security kind of portal where our members can do a lot of things, set up additional MFA authentication or other ways of accessing their digital accounts that are more secure. And as part of that overall portal, we are including the information on their data sharing and enabling them to easily permission or discontinue data access so they can see who they're giving their data to, what kind of data they're giving, and permission or not permissioning that data. And what we're seeing is that all of that clarity, it does two things. It inspires in our members confidence that we're really looking out for them and keeping their data and their accounts secure. It gives them clarity over what's really happening with their data. And what we're finding is that creates an overall confidence that our members have in us. And that is fueling loyalty because I think they see us as protecting their data and at the same time facilitating their financial needs. And it's causing them to stick around and explore more of what PenFed has to offer.
Got it. So, Olga, from your end, how is Zions thinking about open finance as a differentiator in today's competitive banking environment? And what effects do you think it'll have on customer engagement in new products and services?
I mean, in terms of just sort of adding to the conversation on maybe approaching it through a slightly different angle, I think both Paul and Thea have sort of really highlighted the trust elements of this and how you can differentiate by through transparency and so on. Another way to look at it is look at this evolving ecosystem not just as a data provider but also a data consumer. And even in the data provider space, I mean, visibility into the ecosystem of third parties that the consumers are sharing data with gives you the ability to leverage those insights and potentially present relevant offers, and really differentiate through relevance. Now, as a data consumer, sort of playing on the other side of this ecosystem, and Paul alluded to this, there are really interesting use cases in the credit space. So alternative data scoring, income verification, so that allow you to really expand your lending offerings to consumers and think about those lending offerings differently. Use cases like direct deposit switching and account funding, leveraging partners again, kind of leveraging sort of the data in, not the data out construct. Are very compelling in terms of smoothing out the onboarding experiences. And then finally, I mean, what we're seeing is just really emerging value propositions that frankly have very little to do with enhancement of existing products. I mean, we see partners developing solutions such as subscription management. That is not a thing that uh, traditionally banks and credit unions are doing, but certainly is a meaningful enhancements to people's financial lives, and very much aligned with making your clients stronger and putting them in control of their finances. So I think there's a lot of opportunity, not only as a data provider but also as a data consumer that are worth exploring, and that fundamentally rely on this ecosystem existing kind of in the industry. So
Yeah. So now that you all have given us the business case for open finance, let's get practical about it. So it's one thing to talk about open finance in theory, and it's another thing to actually implement it within your organization. So Thea, what does operationalizing open finance look like at PenFed? And how are you how are you approaching cross-functional collaboration, and how do you gain buy-in from all of your teams?
Yeah, so it's interesting, Courtney, because what Olga said, financial institutions are both data consumers and data providers. And so when it came time for us to start looking at being the data provider and how best to do that, we across PenFed had already been a data consumer for many different kinds of applications. One of the earliest ones was linking accounts to enable our members to transfer funds between their accounts at other financial institutions. But there's many other applications that have evolved since then. Particularly cash flow underwriting and other kinds of opportunities that enable us to be more effective at providing services. So when it came time to focus on how are we going to do data sharing, we were able to put together a cross-functional team that already understood the role that open banking and fintechs were playing in the ecosystem and how it was interacting across different business units. So we had a team that really included IT, risk, member service, and product. And they all really understood the ecosystem and what was going on and what we had to do. And then it was really about, I think Paul said this, how do we focus on what's important? Where do we want to be as an institution, and how do we want to evolve? One of the reasons why the team focused on Akoya was we started to think about, we're not in a position to identify which fintechs are going to have staying power, which ones aren't, and then starting to integrate individually with each fintech would have been an enormous burden for the organization from both a financial perspective, but also I think very difficult to create a resilience and stability. So for us, one of the big benefits of doing the integration with Akoya that I think this cross-functional team identified was we integrate once, and then the fintechs come to Akoya, and Akoya integrates with them and is able to serve us as well as the other data providers. And that way, if we have our focus on our stability of our integration, and really being confident we're able to support that. We have far less of a financial burden because, and as well as, it's not just financial, it's, each entity then wants a legal contract and audit documents and third party risk assessments, and that becomes quite burdensome overall for an organization. So that's and the last thing I'll say is, by just doing one integration, when we started on the journey, we were able to really implement it quite quickly and really now and be up and running in a way where we're already providing a lot of the access that our members need to their own data, and feeling, because it's API enabled and not screen scraping, much more confident in that we're providing them the data security they need.
Olga, can you walk us through the early stages of Zion's open finance journey? What conversations or internal shifts had to happen for you all to move forward? And for banks that haven't started to think about open finance yet, what advice would you give them on where to begin?
Sure. I mean, as we started kind of reviewing the requirements of 1033 and really understanding what data we would have to provide, it became very clear to us that at least in our technical environment, that data had to come from so many different sources, and sort of stitching it together into a single source of truth, into a platform where we could leverage for analytics, reporting, and that was going to be really important before we expose this data to the API. That was to the API layer. That was a kind of an important realization for us. Continued investment into the API infrastructure. That was, sort of another element of all of this. I mean, we've been on this journey for a while, but this effort certainly required us to continue leaning in that space, and then. Also kind of evolving our thinking about what we're building from just sort of this vision of a bolt-on to digital banking, uh, to really thinking about it as a distinctly separate channel, and I recognize that in I mean, there are really compelling reasons to think about it as a bolt-on to digital banking, because if you think about it, the authorization framework from digital banking can kind of be reused, but there are also sort of pitfalls in that kind of thinking, because I mean, you are not pushing yourself to really develop this as a standalone channel with resiliency, reliability, operational support, and production support requirements, and really use analytics, and kind of all of the elements and all of the hygiene that's required for you to kind of look at this as a channel you could be monetizing.
Right.
And anyway, so evolving that thinking, kind of from an execution perspective, technical execution perspective, and then product perspective, that those were probably kind of the key elements of the journey. So.
That was great. Super, super insightful. Paul, I'm going to segue to you. What are some of the most common roadblocks you anticipate banks could face when it comes to operationalizing open finance, and how do they overcome them?
Yeah.
And go ahead, Paul.
I'm happy to. Well, I just wanted to add, because I thought Olga hit a good point on an organizational change. I think I start to see like a culture shift within financial institutions as well, as they think about this as a new channel, as a new opportunity to serve customers, whether it's expansion of online, mobile banking, or other channels. There's a cultural shift where you start to think about how you can interact with your customers off platforms or through different third parties. I think that was a really good point that Olga made. As far as roadblocks that I hear, like across the financial industry, um, typically I hear like two big ones. Like one is like just prioritization. Like there's so many things going on, and like where does this stack in the priority list? The second is around cost. Okay, like I've got to do something. I've got to build. I've got to invest in something, and doesn't warrant it. So on the priority one, it's interesting because once financial institutions really start to get smart on this and get educated, you realize that it's already happening today. It's just happening in an unsecure way if you haven't done anything about it. So consumers are already doing all this stuff. It's not like they're waiting for the bank or the credit union or the brokerage house to kind of go and figure this out. Like the consumer has already said, there's an app out there that's important to me that I want to use it, and I'm going to go and figure out a way to use it. And so for the most part, unless an organization has started to put up the perimeter security and the blocking, it's happening on the financial institution infrastructure. And that starts to light a switch throughout a number of folks within the organization that, okay, we might not be able to solve everything all at once, but we need to act and start to implement to at least start to have improved security, improved awareness control. And it's kind of like these incremental step changes. So just starting and doing something, you start to see some incremental value. I think that's on the priority that folks ought to get. On the costs, it's interesting. The landscape has changed so much now that like there's so many options to actually partner with service providers in the space. Where like when I started in the industry, 10 years ago, it was basically like a financial institution had to go and do this themselves, like completely end to end. I worked at Chase. I built something from scratch, and it's a lot of money, it's a lot of time, it's a lot of work to go and stand up. And now, as you fast forward, there's more partners in this ecosystem that are helping as serving as service providers to financial institutions. Akoya being one of them. There's others out there. But the ability now to do this at a much lower cost and a much faster time to market. Like that ability to, as Thea kind of pointed out to your ability to ship and then to accelerate and deploy to not only hundreds, but thousands of third-party applications. Like the partnership model has helped enable that. So I think that's a big, item that can kind of alleviate some of those roadblocks.
Okay. Paul, I'm gonna stick with you and ask you, what do you think from a platform perspective, future-ready open finance strategy should look like? And I'm gonna ask you to be completely open here, give me your thoughts about how banks should be thinking about these fintech partnerships, especially in the environment we're in with a combination of industry and government-led changes in open banking and open finance.
Okay, so that was a lot.
Compound question, no wrong answer.
Yeah. So I think like just going back, there's a lot there to unpack, but let me go back to just the basics of you've got to start with what your members and customers are doing today. And you've got to be able to figure out how you can still enable them to do the things you want them to do and do it in a safe and secure model where the customer or the member has the control. And I think like taking a look and understanding that it's already happening, you've got to build something. Consumers want some type of access to this information to do this, and you've got to stand up the technical implementation. So what does that look like? It typically looks like extracting the data from your systems of record. You've got to stand up some endpoints. You've got to externalize them. To get ahead of the game, you probably want to standardize these and get these into an industry standard format like an FTX. And then you've got to figure out how you implement with the hundreds, now even thousands of third parties in that ecosystem. And then you've got to run the engine and kind of manage this operation over time, hydrate and invest it. It's kind of like a digital channel. So you're looking at things like response time and availability and all your non-functional requirements of how you upkeep this, because ultimately you want to have the great experience for the consumer. So I kind of think of it as like there's these three personas. You as the financial institution, you've got to make sure you have the right tools and infrastructure in place. For the consumer, you've got to make sure that there's a good experience. It's easy to use. The consumer can manage it and control it. And then the third persona is like the third party. That could be the fintech and aggregator. How do you interact with them? You've got a developer portal, sandbox, test environment, and so forth, so you can actually start to implement all that stuff. So that's kind of the building blocks of, just doing the right thing for your customers. As far as the regulatory comment, kind of like where's that happening? I think it's like a good reminder to ground ourselves in the facts. The 1033 or personal financial data rights rule, it actually went into effect in January of this year. It is law. But the caveat here is that the first compliance dates are not until mid 2026. So as financial institutions are ramping up and kind of trying to figure out does the rule actually stay or not, I think you're seeing a lot of financial institutions just move and do the right thing for their consumers anyway. But the current rule is, currently there's a lawsuit going on, so that's kind of currently being debated. Both the plaintiff, BPI, and the defendant, CFPB, have submitted their legal briefings. They're now more or less aligned on the concept that the rule should be set aside. There's another trade group called the FTA, Financial Technology Association, which has intervened. It is now supporting the rule. So I think we're going to have at least some more months of debate and legal briefings before we get kind of a final read. But I would expect we'll see something by end of year from a readout from the judge. But like I said, in the meantime, we're seeing financial institutions move forward and just do the right thing for their customers.
Right. Thank you for that, Paul. I know I kind of was like put it out there. So we are about to go into audience questions, but before we do that, I would ask each of you to leave us with a closing thought. What's one piece of advice you'd give to financial institutions starting their open finance journey today? And what does success look like in a world where all consumers have visibility and control over their financial data? So I'm going to start with Paul, pick on you again.
I think ultimately just like working in the space along, like starting with the consumer and really understanding what they want, what they need, and then how you are going to serve and protect them. It doesn't mean they'll get everything they want, but I think you've got to start with that journey. These open banking pipes and experiences are usually, a very small component of a broader task or job that the consumer is trying to accomplish, and really understand what that is, and then work backwards from there around how you would protect them, how you would give them more control, more visibility, and so forth. And then you can kind of work through the actual building blocks to deliver them, but start with the consumer.
Awesome. Olga, same question to you. What advice would you give to financial institutions starting their open finance journey? And what would success look like in a world where all consumers have visibility and control over their financial data?
I mean, maybe just sort of keying off of what Paul said, to some extent, the rule when it was issued caused a lot of FIs to look at all of this as a compliance requirement and a kind of security mandate, which sort of almost introduced blinders and created a little bit of sort of narrow thinking on the topic, right? We have deliberately been stepping back and thinking about this not as a compliance initiative and security initiative, security mandate, but more of a product initiative. So what are we doing to how can we really productize this? What are we doing was this capability to create stickiness, to enhance trust, and sort of really pivoting the thinking towards business led from compliance mandate. That was probably one of our biggest lessons learned. And the way that this has been developing, and Paul alluded to this, I actually think that this thinking will serve us well.
Thea, same question.
Okay, yeah, I'm going to pull on a little bit of both Olga and Paul. So when we started the journey and the rule had come out, we did see compliance as one aspect of it, but I would say also I think a lot of the FIs who haven't yet sort of stepped on to the journey of kind of modernizing data sharing may actually be data recipients at this point and are receiving data. And I think that gives you a window into what your consumer needs are, and provides like kind of a holistic perspective on what's necessary. But the piece that was missing, and because the rules specifically, I think, kind of made it challenging when we were starting our implementation was, can banks actually monetize their data in some way? And I think, the recent announcements of Chase that came out where they're basically saying, we're going to start charging for this data, because today we're in this environment where the fintechs actually have a tremendous amount of market power. And I think that if Chase is successful and other large institutions follow, it will shift the balance of power in the marketplace, in the ecosystem. I mean, PenFed being a smaller entity would like to ultimately do that, take advantage of it. I can remember us talking to Paul about that. And, it being very unclear where the rule was and whether we would even be allowed to charge for our data. But I think given that's somewhat under debate, and likely to change and evolve, I think also kind of just thinking about trying to maintain some flexibility in the future, because, even though we have an efficient way of supporting open banking, it still requires expense and investment on the institution side. And while it does inspire loyalty, I think that for now, where we sit, the fintechs are getting the better part of the bargain.
Okay. Well, that is a good note to turn over to our Q&A with. I'll say, Thea, Olga, Paul, thank you so much for engaging in this discussion and giving us all of this information. And I will turn it over to Isabella now to facilitate our Q&A from the audience.
Great. Thank you, guys. So just a reminder, if you have any questions or comments, you can place them into the Q&A box on the bottom of your screen. I know we're approaching the top of the hour, so maybe we'll try to get 2 or 3 questions in, and if we don't get a chance to get to your question, we can follow up post-webinar. So I'll start with this one question. What advice do you have for smaller institutions that may not have large technology teams but still want to provide a modern, secure data sharing experience for their customers?
Yeah, I'll take that one. Reach out to a partner. There's a number of service providers out there. Akoya is one of them. We'd be happy to engage, and initially start with education around, helping the organization get up to speed around what's happening, and then can discuss solutions to actually implement and so forth. So that's the nice thing about right now is there are a number of options and partners and service providers to work with.
And I would just maybe amplify this point. I mean, I think the uncertainty around the rule has created a little bit of breathing room for service providers and institutions. So I mean, when everybody was marching towards a milestone, the environment was distinctly different. So right now, there's actually a really great opening to go explore this without sort of the pressure of that milestone on institutions that have to just given the uncertainty around the rules. So.
And I could just jump in. I mean, I think in terms of being a small institution, you might want to explore, like our tech stack we went through a process before we did this of modernizing our tech stack to be sort of an API-enabled tech stack to begin with, so that when it came to creating integrations, we already had the foundational layer to do that. So I think, it's also, as a smaller institution, kind of prioritizing, where you are in terms of the overall digital banking journey, right? Because I think developing a modern kind of front end system that is API enabled is sort of a foundational layer that will serve you well as you try to plug into the open banking ecosystem.
Thanks, guys. See if we can get through maybe one more question before we close out. Let's see. How do you ensure your open finance strategy remains scalable as technology and consumer behavior continue to evolve?
I mean, I'll venture with a point of view. I mean, I think we all got to experience what it takes to scale digital banking solutions, right? And I think in some ways the secret sauce every organization has developed to solve that problem is probably pretty reusable. So you modernize as you go, you modernize as your user adoption, as your user adoption grows, and I mean, so sort of the same proactive practices of building the resilient infrastructure and the funding the operational infrastructure to support this. I mean, I don't know that there's a ton of uniqueness here in terms of being able to be responsive to the market. At least that's my point of view.
Yeah, I'd agree. And I typically look at in the open banking space, I typically look at two dimensions. There's the network performance, the scalability, the TPS and throughput and capacity, and how do you prepare for that and the volume. And then there's the evolution of the data sets. So as data evolves or use cases evolve, you might need to incrementally add new data. But I think the point that Olga made is still true, that it is very similar to scaling and planning for other channels or projects and programs across the financial institution.
Yeah, I don't have much more to add to that. I think Paul and Olga kind of nailed that in their perspective.
Great. I think we are to wrap up. We do have a couple of other questions in there, but I know some people need to head out, and I don't want to take up your whole afternoon, everyone. But any closing remarks from our speakers?
I appreciate being part of this conversation. It's a great topic, and really appreciate Akoya's leadership in this space. So thank you.
Yeah, I would say the same here. I've enjoyed being part of this discussion. I think it's an evolving space, lots of new things that are happening, and it's been, I think we've had a very good relationship with Akoya, and have really gotten a lot of value out of the partnership.
Great. And I'll just add for all CBA members, if you would like to follow up or have any one-off discussions, please feel free to reach out. We're always available to engage, and happy to talk to more about the topic with members.
Thank you guys so much, and thank you, Akoya, for joining us. Olga, Thea as well. Thank you for joining us today and taking part in our discussion. The session has been recorded and will be available for viewing within 1 to 2 business days on our site. Yeah, thank you guys so much, and have a great afternoon. You may now disconnect.
Thank you.